Welcome to Property Deconstructed. It's all about property and the lifestyle, whether you're renting or you're buying, thinking about the lifestyle, maybe building your wealth through property. It's a, what do we call it? It's a collective wisdom.
Collective wisdom.
That's right.
It. Yeah, thanks, Pat.
Mark Errichiello from Master Advocates. I'm Pat Panetta from Tell Your Story Media, and we're back with Property Deconstructed. G'day, Mark.
Hey, Pat. Good to see you again. Yeah, thanks for the introduction as well. But collective wisdom about our own thoughts and experience in the industry, but as well as our special guests and sharing their thoughts and wisdom and experiences or lessons which can help people in the market or just share where people need help as well.
Leah Calnan is the founder and director of Metro Property Management and also Property Management Training and Consulting, the past president of the REIV during the COVID-19 pandemic, which I'm sure which was a big challenge, which we'll cover off in our session today. Leah, welcome to our studios and thanks for your time.
Thank you. Thanks for having me. It's exciting.
Oh, welcome. Yeah, very exciting. Thanks so much for agreeing to come into the studio as well.
My pleasure.
I know you've got a wealth of experience and wisdom to share. Even we take care of buyers and vendor advocacy mainly, but we have a small property management department. And during the pandemic, I couldn't have sung your praises more. The way you handled your presidency position, the updates late at night. There was so many changes.
It was full on.
It was full on.
Wasn't it?
It was either listening to Daniel Andrews on the news or checking in where Leah could get updates for us for the property sector. So it was
my children were well versed on legislation changes.
Yes. Mum was in the background sort of giving all the updates. Well, property management, that's what we're going to focus on here. So maybe a brief definition. I know our viewers and listeners sort of are in the property world, but managing people's properties with rent and that sort of thing?
Yeah, look, property management certainly changed over the years. I've been doing it for close to 30 years now. And, with the introduction of new legislation about 3 years ago, it's more complex, it's more strategy needed, more education. It's a very complex world now.
Yes, look, I'm learning that from just hosting this with you, Mark. It is more complex and there's a lot more things to think about. And that's why we need experts in that space now to guide people through.
Yeah, and on the changes and reforms, it really needs to be advocated to have more voices across a balance in the industry. Considered approach, not just the consumers and tenants, but also experienced agents like Leah in the property management space that can actually help advise in the legislation as well. That's more effort and emphasis there to balance training in understanding the reforms, the minimum standards, but as well as how there's an effect with the interest rates on investors, tax talks on investors, and land tax, other factors that all compound. There needs to be more incentives for the investors to keep going and supplying the market.
Is that the disappointing bit? The incentive isn't there now, or it's being removed, or they're attempting to remove it? I'll just get you a bit closer to the mic there. So tell me what the incentive.
Oh, look, I think in the current government structure, investors will never really be provided with the incentives that they need to be provided with in order for them to remain in the market. We saw that exit through the COVID years. Unfortunately, we know that the property industry brings in about close to 50% of the income through to the state's budget. So
you're the honeypot in a way. Is that what you're thinking they've come to you?
Investors and those paying land tax and stamp duty and, the developers and everyone else, absolutely. So, whilst those incentives are absolutely needed, are they going to come? Probably not. We'll just never see enough social housing being built, not in my lifetime. So
no, I don't have confidence there. I think that's right. The government is saying they can. I guess they're picking a number when it comes to social housing, but we need the private sector to do the heavy lifting in that space. Yeah,
that's right. And the private sector has evolved over the last 30, 40, 50 years. People buy properties in order to support themselves through that wealth creation and ensure that they're not supported by the pension. So I think the average stat, it sits at about 75% of investors own one property. So
isn't that there's a whether it be the media or this sort of perception where it's just rich people with many homes and it's 75% have one or mum and dad sort of investors.
Yeah, and really, you'd need a few to be self-sustained in retirement. Given the fact that that might be 20 or 30 years away with inflation, population growth.
Yep.
So there needs to, and not even in current times, the incentive to just help supply the market and the rate of migration. That's probably more important. Government can focus on fixing the infrastructure problems and everything else.
Yes.
With their budgets as well.
Yeah.
Has the government sort of potentially going to shoot themselves in the foot by, as you say, they get lots of tax revenue from that sector, but by hitting everybody over the head so hard and creating the disincentive, they may just be, causing a problem for themselves.
Yeah, and that problem has been coming for the last few years. We saw the increase in sale valuations and sale prices. So there was a real opportunity for people to actually exit the market. But now, probably more than ever, we need property investors, not just the mums and dads, but we need those investors who own 2, 3 or 4 properties. They are the ones that, provide that housing. They will look at different opportunities in the marketplace, because without those people, we're just not going to have that supply. And when you've got a vacancy rate that sits at less than 3%, 3% is deemed a normal. Anything under 3% is critical, and I think at the moment we're at 0.8 or something along those lines.
Yeah, it's the lowest I've seen, and I've been, I was raised in a real estate office, but then 20 years working in the game myself, and it's the lowest I've ever seen, even with, the demand, and we're seeing sentiments of that sort of GFC period where you have people lining up and desperate for rental properties, going to short stay, in between buying and selling or renting property because there's nothing around.
Yep.
I don't know if you can paint a picture on the snapshot or sentiment in the market, the rental and property management market.
Yeah, look, it's really challenging. There's a few different factors to consider. You've got a lot of prospective tenants out there who are looking for property, and there's a level of frustration because there's not enough property. So that creates angst for those people in that property management space showing property, which, is not always pleasant. You also then have increased rents. Never in my lifetime in being property management have I seen rents increase at the speed they have. For example, you could negotiate a rent increase to be issued today, and by the 60-day notice period, the rent could have moved again. But the interesting thing at the moment we're seeing, particularly in the Mornington Peninsula, there seems to be an increase in properties coming off that short stay because there's a lot of rumblings around penalties, fines that government's going to introduce to that short stay market. So they're coming back onto the rental market. Right. So you'll see an increase in that availability down there, but that's the only area that we've seen across the state which has had an increase in supply.
Were they forced them into the longer term fixed rentals?
Yeah.
So I guess they'd be quite desperate to try and find solutions now to catch up on the housing supply.
Yeah, that's exactly right. And it seems that, the investors are forced to make these decisions whether or not they take it off the rental market or they put it back onto, whether they do short stay or they put it on the private rental market for 6 months and then see what happens. But that then compounded with, the recent announcement through budget around, the introduction of the additional land tax, even those owners that own an apartment will potentially be penalised. So there is a big angst. My phone went nuts that afternoon of the budget, because owners are like, I'm out. I can't do anymore.
Yeah, the straw that breaks the camel's back in a sense. Yeah, because you've got, I guess, and some say, oh, well, you claim that on tax. It's still a cash flow issue. Yeah. And where's the incentive to, you don't want to just break even.
No.
You're investing and putting yourself out there and working harder. It's not like it's just change in their pocket. They're working harder, longer hours,
to maintain this investment
and make a future for themselves and their family when they do retire.
And you're not making any sort of fat on it while you're renting it out, and then you've got to pay your big lump of tax at the end of the year.
Yeah, exactly. And we've seen increased costs from, not just land tax, but we've seen it with council rates everywhere. Those costs continue to increase with the new legislation. We all want properties that are safe for the consumer, but we've seen things around the height of range hoods, range hood arguments on range hoods between 10 millimetres. Like, that is just ridiculous. So there's definitely challenges out there.
Yeah, boy. And what was, I guess, building code regulation and standards at the time compared to residential tenancy minimum standards, there's grey areas. And I think
Right,
that's
right.
where sometimes you go mad with legislation and over analysing things that are safe. If it's safe,
Yes,
what's
yes.
the
Well,
what's the
governments
risk?
are known for that. That's right. They make rules that are written on paper, and then when they roll out in
I don't
reality,
always
it's
think about
causing
it from
problems.
a practical
From
point
the
of
practical,
view. That's
yeah,
right.
yeah.
And this particular government doesn't always like to take. Well, they don't take advice from
No,
anyone.
they're not. No, that's right. For those, well, we're focusing on Melbourne and Victoria here, our listeners. But for those outside of Melbourne and Victoria, yeah, the government here, Mr. Andrews doesn't tend to sort of take that sort of advice on board. So I guess that's all pretty a dark picture. Let's lighten it up a bit. Where is it going? Is there opportunity? And can we still get in there and get an investment property and have a happy person renting the place and make some money? Is it possible that we could do that still? Yeah.
Yeah, look, I think the vast majority of investors that enter the market have a good experience. You know, the vast majority of owners, landlords, RRPs as they're now referred to, they do the right thing. They're good people, and the vast majority of tenants do the right thing.
Yes, yes.
It's just that tarnished aspect of what we see on A Current Affair, and
Yes.
they make the news or challenging situations. But there's definitely opportunity out there. There always is. It's just for those investors that want to take that, I suppose, a bit of a leap of faith at the moment and see what they can potentially afford and what sort of return it comes with.
Yeah, and that's right. Affordability, and there's always opportunity to compromise of where you are investing. You're not restricted to one geographical area. You can compromise on a few suburbs, a few different pockets and property types that can perform well.
Make a sacrifice and compromise. Yeah. So a bit more strategy involved. Think about what you can afford and where you want to go and that sort of stuff.
Yeah.
Yeah.
Absolutely.
And those customers who phoned you and said, I'm out and sort of hit the roof, was it just a moment of, emotional outburst, or do you see people just like they're really exiting?
They are
that's a worry.
They're really out. And my particular business is a little bit different because we're not geographically located, so we're talking from an apartment in Richmond to a townhouse in Maidstone to a property in Dramana. So there's not just one particular pocket that is going I'm out. It's across the board, and a lot of our clients are interstate, so they say, you know what, I might actually just take my money and invest it in somewhere else.
So that discussion is happening across a broad area, and then you've got the supply coming out because it may sell. If they sell, it may happen that a first home buyer or someone takes it out of the private rental market, or young professionals occupying.
And
then we have less rental.
That's right, and that seems to be the very large misconception. People automatically assume that just because it comes out of the rental market, that's a good thing. And it is to allow that first home buyer to get into the market, absolutely. But it doesn't replenish the 1, 2, 3, 100 properties from the rental market that is needed. Yeah. So it's a good thing on one side, but it's actually in the overall longevity of the private rental market, it just continues to compound the issue.
Yes. Well, migration, all the students will be coming back. Yeah. Which is, it's a lot of revenue and money for the universities and for the whole economy. They're all coming back. Where are they going to live?
That's right. That's right. So there's the supply and people that just can't afford to buy in the rental market. They need a roof over their head. So it actually is a collective effort to incentivise private landlords to buy more property and supply the market. It helps the renters. And keep a balance of consistency. Yep. But I was going to ask, Leah, I know this has been a great discussion, but if you can stay on for another episode.
Yeah, sure.
Time,
I can talk about property management for hours, days.
There's a lot more to discuss, especially around the migration part and supply. So,
okay. But that's on our list for next one.
We might wrap up this episode number 9. We're at already, Pat. So.
Yep, all right, and we'll come back with Leah. I've got a question about being bitten by a donkey during a live update. Okay, well, that's coming up too.
Yeah, thanks, Matt.
So thank you for being here for this episode of Property Deconstructed. We're returning with Mark Errichiello, Leah Calnan, and I'm Pat Panetta very soon here on Property Deconstructed.